Hello everyone, today is February 3rd, 2024. It is also a day worth remembering, because China's AShare market has hit a new low in recent years. Pessimism pervades the entire market. Investors are wailing and worries about the future economic prospects. In this investment environment, I opened the AShareHunter channel to discover valuable stocks. Even in the cold winter of investment, AShares still have good stocks worth investing in. In fact, value investors like winter, followed by spring, sowing the seeds of the future in the winter of investment. The investable company I introduce today is WeiChai Power Company. WeiChai Power's main products include powertrains, engines, gearboxes, axles, complete vehicles, hydraulic controls, and auto parts. In addition to domestic sales of engines, the products are widely exported overseas and are widely used and served in global trucks, buses, construction machinery, agricultural equipment, ships, electric power, and other markets. In the current market environment, there are two core growth points for investing in WeiChai Power. One is the sales trend of the heavy truck industry, and the other is the penetration rate of natural gas engines. Let us first look at the sales trend of heavy trucks. The red dot in the picture is 2024 sales number. In January 2024, China's heavy truck market sold 91,000 vehicles, an increase of 75% from December 2023, and a significant increase of 87% from the 49,000 vehicles in the same period last year. The sales level of 91,000 vehicles in January was higher than that of the heavy truck market in 2023 with an average monthly sales volume of 76,000 vehicles. The heavy truck market in 2023 is actually better than that in 2022. It is estimated that throughout 2024, heavy truck sales will reach 1.1 million units, an increase of 20.8% compared with 910,000 units in 2023. Let us talk about natural gas engines. Natural gas engines are widely used in 6 to 18-meter passenger cars, light, medium and heavy trucks, engineering machinery, special vehicles, ship power, and power generation equipment. They have high reliability, strong power, energy saving and environmental protection, and the key is cost saving. Since the second half of 2023, natural gas prices have continued to decline, and the diesel-natural gas price gap has continued to expand, highlighting the economics of natural gas heavy trucks. Natural gas LNG prices have continued to fall since January 2024. After the heating season in northern China ends, LNG prices are expected to continue to drop. From March to April, natural gas heavy trucks will usher in the peak replacement season. The core here is that using natural gas for transportation can be efficiency and saving money. In 2023, the sales volume of natural gas heavy trucks will be 138,000 units, a year-on-year increase of 430.9%, and the penetration rate will reach 22.5%. It is expected to continue to increase in 2024. The penetration rate of natural gas heavy trucks is expected to reach 35%, with annual sales exceeding 250,000 units, a year-on-year increase of 81%. WeiChai Power and Cummins are the main truck engine suppliers. WeiChai's market share exceeds 60% in China. In 2023, WeiChai sold 100,000 natural gas engines, and it is expected that it may exceed 150,000 units in 2024. The price of natural gas heavy truck engines is 20,000 to 30,000 yuan higher than diesel engines in the same horsepower range, equivalent to a 25% to 30% increase. This also promotes the change trend of WeiChai Power's gross profit margin. It is expected that the gross profit margin will continue to increase in 2024 compared with 2023, reaching a new high this year, with a gross profit margin of 21%. On January 23, WeiChai Power released its 2023 performance forecast. The company expects to achieve a net profit of 8.58 billion to 9.32 billion yuan last year, a year-on-year increase of 75% to 90%. WeiChai Power also announced its performance commitments for the next 3 years. The operating income in 2024 will be no less than 210.2 billion yuan, the sales profit margin in 2024 will be no less than 8%, and the total profit will be 16.8 billion yuan. The operating revenue in 2025 will be no less than 231.2 billion yuan, the sales profit margin in 2025 will be no less than 9%, and the total profit will be 20.8 billion yuan. The operating revenue in 2026 will be no less than 258.9 billion yuan, the sales profit margin in 2026 will be no less than 9%, and the total profit will be 23.3 billion yuan. Judging from the current trend of gross profit margin changes, it can be said that achieving this performance goal is certain. Correspondingly, in 2024, the net profit will reach 11 billion yuan, and the current PE number is 11.7. According to the valuation of 14 PE, it corresponds to a market value of 11 billion. 14 equals 154 billion yuan. The current market value is 130.5 billion yuan, and there is still 18% room for growth. Judging from the trend of the stock, it is also relatively stable. It has significantly outperformed the Shanghai and Shenzhen 300 index for 2 consecutive years. Especially in the current pessimistic environment, it is a recognition of the current corporate value. From the perspective of gross profit margin improvement, operating income growth, and the gradual increase in the penetration rate of natural gas engines, AShareHunter believes that it is a stock worth holding in 2024.